Okay. Good morning, you beautiful human beings. Wherever in the world you're joining us from, it is a beautiful Thursday. In some places of the world, some places in Southern Africa, around Africa, it is raining this morning. So if you have a slightly damper day today, I'm here to pick up those smiles. So guys, there's a lot happening in the markets. A ton happened yesterday. A ton has happened this week. And I think we're in a very, very good position to capitalize on some amazing market positions. So wherever in the world you're joining me from, massive welcome this morning. I hope you guys are ready. Sit down, learn a little bit about what's happening in the market and what could eventually be coming. Now, if you were copy trade clients, you are copy trade clients, you'll notice trades from yesterday were not processed onto the account. We were taking a cautious approach, reevaluating the dollar's position, really just spending a lot of time in the market. You'll see our signals are absolute fire. Our signals are absolute bangers across the board. We just demolish the markets with regards to our signals. Now, it's a little not as, how do I say, straightforward when it comes to the copy situation, because we're catering for such a wide audience. We're catering from, a couple $100 all the way up to a couple $100,000, right? You need to understand we can only copy certain positions. We have to make sure that the risk is intact for everybody that's on board. So again, we're on the cautious approach. It's the second week running. We want to make sure we end the month super strong. We want to take the slow and cautious approach. So if you see a trade not copied, please don't stress, please don't worry. Unless you fiddled with any settings, please don't worry. I go through all the accounts at least once a day and just double check everything is correct. So unless you see something issued, please do not stress. If you need help, just reach out to us on school, wherever. You've got most of our details and we will assist you. So that's just that, a little bit of info on that. Now, in terms of where we are for the day, I just really want to start with a quick brag in terms of where we are from a signals perspective, and we're absolutely just smashing it. So I just really want to show you guys this really quickly, just in terms of where we're at for the day and where we are currently at in terms of our goals. So at the moment, if you have a look at the current running pips situation, right, we're currently sitting on 1,338. Right, some of those trades were sent to Premium Plus. So if you take out the German 30 sell, the US 30 sell, right, that means we've delivered over 500 pips, including the running positions. We still have AUD USD, we still have AUD JPY, we still have GP USD running. We just banked TP1 on GP USD. So if you take the running pips plus what we've given for the free community, we've exceeded the 500 pips, meaning no more trades will go into the free community. Only trades will go into Premium Plus. So if you want to get into Premium Plus, links are down below. Links are on all of our posts. Upgrade. It's totally worth it. There's nothing else like in Africa right now, right? The closest thing to what we do in terms of a competitor who offers the type of education we offer, this type of signals we offer, the type of live shows, the support, the community, etc. The closest competitor to us is sitting at $300-400 every single month, right? So it's an absolute no-brainer. Hit the link down below. That's where you need to be. Now, something strange happened yesterday. For a couple of you that noticed, right, we're going to jump into it. You guys will notice I mentioned yesterday morning about PPI, Producers Price Inflation, right, or inflationary numbers on a production level. But if the key eye among you, I've got a few inboxes, but nearly not enough inboxes to tell me that everybody was on the same page, right? If you go have a look at yesterday's economic calendar, right, you'll notice that there is no PPI for yesterday, right, completely missing. Here's yesterday's calendar. Completely missing, right? If you have a look at FX Street, right, for yesterday, you have a look at the dollar, right, yesterday PPI, there's absolutely nothing, right? A few economic calendars completely excluded the PPI for yesterday, right? And my spidey senses start to go a little bit mad when these things happen. You kind of wonder why did they end up doing that? Here's the reason. I believe there's something that they don't want to advertise, they don't want to sort of publicize, and this is it right here behind me, right? If we have a look at what happened yesterday in terms of that PPI, right? Here's the PPI for yesterday. There was no forecast, right? So nobody was speaking about the forecast. Nobody was even speaking about the producers' inflation data for yesterday. It was dead silent. It was quiet. The reason for that is the PPI, right, for month on month of December, which also obviously looks at January, that was a negative 0.2%, right? Core PPI, which excludes volatile things like food and energy, right, came in at negative 0. So we actually have disinflation, right? We have negative inflation, right? Inflation is coming down. It's decreasing, right? Which is exactly what the Fed wants. Now, why would this not be spoken about? Very, very simply put, right? You guys saw the higher than expected CPI readings, the red hot dollar, that super high inflationary reading. for the dollar for January, right? That came in over expectation. Super hot dollar caused indices to sell off, causes gold to sell off, causes anything where the dollar is the quote currency, right? So GBP USD, GBP base currency, USD quote currency, anything that the dollar is the quote currency, gold, XAU, USD, Dow Jones is US30, USD. Anything where the dollar is the quote currency would have caused a sell-off. Anywhere where the dollar is a base currency would have caused a buyout motion, right? Because that strong dollar. From the CPI release, red hot dollar. Now, again, I'm going to show you a few articles that will confirm this. But basically, I think at the moment, consumers are more confident than we expect. And I think markets are going to be hotter than what we expect. And because we got that red hot dollar, yesterday's producers' inflationary numbers were kind of swept under the carpet. So as I explained to you guys yesterday, inflation on a production level is passed on to the consumer, right? If your production costs, rise, you have to pass it on in some way, shape, or form to the consumer to recoup your money and make a profit. So the fact that we're seeing producers' inflationary numbers starting to go into negative inflation, disinflationary territory, means that I think the markets have quite a big surprise for us, quite a big surprise for everybody else but us, right? So let me show you what it is that I'm busy thinking. But before I get there, let's just wrap up the news really quickly, and I'll show you guys what's happening in the markets for today. So just looking at the news, stock market sell-off still showed signs of strength. We're going to talk about that in a second, right? Stocks rebound after CPI-led rout. We'll talk about that one as well. And maybe just a wrap up there. Elon just moved their incorporation from Texas to Texas from Delaware, right? That's just a tax reason. It's just more incentives there for them to do that. Now, there's quite a lot happening in the world, and if you pay attention to this, you are going to be able to profit in massive ways across the board. Now, yesterday I spoke about NASDAQ, and I spoke about a potential opportunity that NASDAQ was showing that could lead the signs for the rest of the market, and it did exactly that. So quickly show you guys what happened to NASDAQ, right? Yesterday morning, we were speaking about the potential for NASDAQ to have made this market bottom and yet still not necessarily have exited this channel that it was in, right? If you guys remember this from yesterday's Pounds for Breakfast, we spoke about the fact that NASDAQ had not exited this channel, right? Wasn't a clear breakout, wasn't a clear move there. And I was very interested as to why NASDAQ would not have been a clear break. Now, yesterday morning, just after our Pounds for Breakfast live show yesterday, we started to see that NASDAQ started to build up in momentum, right? Built up in momentum. We got that PPI release that never happened, that happened in some places, not others. We got that PPI data point. Markets kind of hesitated, came back for that retest, and now are in bull territory. But I want you to see something. NASDAQ recouped or recovered every single point of the losses it made from CPI. So what does this mean, right? CPI was completely wiped out, right? CPI made a big short move, massive downside movement, huge downside movement, and basically recovered organically back to past entry, right? Before pre-CPI, it's been recovered. So NASDAQ is telling us something, right? And again, that was what I was feeling towards yesterday. Now, further understanding that we've got that production inflation data on the US coming at negative numbers, right? This is going to further cause a little bit of weakness on the dollar. Now, markets did not take that strong CPI as, oh, wow, this is amazing, right? Markets saw this as, okay, what did the Fed say? The Fed said, Papa Powell said that the March cuts to interest rates is pretty much unlikely. So that was priced in. Markets reacted, said, okay, that's hectic. It is what it is. But there's still price cuts or interest rate cuts due for this year. That's currently what's expected. That's what the market is playing for. Remember, the markets don't deal with what's happening today. Fundamental data moves the market, sure. But markets are really thinking about what's happening in the next 3 to 6 months. That's how smart money moves. So the rate cut reduction is still in the cards. That's happening. Now, what better option or opportunity do you see for someone to get into the stock market, into commodities, etc.? If rate cuts are imminent, what would entice investors to get further into these opportunities, right? Again, what's the term we usually use, and what's the term all investors use, right? You want to buy low, you want to sell high. So what happened with markets after CPI? Markets were lower, and a lower market means better entries for long-term long trade investors, right? So I think it's created a perfect storm situation. Now, already US 100 has played out. We're already seeing US 100 here just behind me in that new bull territory, right? That's already playing out as we speak. But there's one pair that has not yet broken cover, right? One pair that I believe is imminently going to show us some pretty cool things, right? So just a quick shout out to everybody in the house with us this morning. I can see Vaynard, Lucky, Petunia, Claude, Quinton, and Paul in the house with us. Good morning, guys. As always, keep the energy up. Let us know where in the world you're joining us from. Always love to know if everyone's at home, on the roads, at the office. Hopefully nobody's driving, but just do let us know where in the world you are joining us. Just city, country will do. That's all that is really needed. And if you are viewing and not commenting, you're suspicious, right? I've got my eye on you. You're a little bit suspicious. Okay, so let's get into it, right? Now, gold. I spent quite a bit of time this morning, probably about 2 hours just on gold, really just breaking down where gold's at, what it's doing, right? And I'm going to spend a little bit of time on this because I want you guys to really soak this in and I want you to understand what's been happening, right? Now, when we look at gold, this is a weekly time frame, right? And I must also point out, apologies, we were looking at the NASDAQ, right? This is currently in a 1 hour time frame. So 1 hour time frame, fairly zoomed in. You can kind of zoom out, draw out that channel, right? A much bigger channel of 4 hours, and you should be able to match. Ignore the resistance levels there, just match support, and you should have a good indication of where we're at. Now, looking at gold, this is a weekly time frame. We've spoken about this quadruple top, right? We've spoken about this over, quite a bit of time. What I do want to point out, and what is becoming a very common theme in markets, specifically, I would say this year, right, is that we're seeing a lot of markets that trend in a market structure, right, break structure and retest that trend level, sometimes twice or more, right? And that's exactly what we've seen on gold, right? Pretty much the start of 2022, we see that breakout in market structure. And whenever there is a channel here, I just want to also point out, we also see that gold overextends itself, right? Where it's supposed to find support, when we find a channel, we see an overextension, right? And this is what is catching a lot of traders, right? This overextension past, normal volume order levels, right? This is what causes bear traps. And a lot of traders see that and they go, oh, well, this must continue short. This market's broken structure, double top, it's now broken. No, that's not the case, right? So we see the third attempt for the top comes back down to where it should have stopped, right? Somewhere around about there. That's normal market volume or normal volume support here, right? Which is where this market should have held out. It doesn't in that channel. It overextends towards that downside. And we can see where that overextension is hiding itself. And then comes back for that retest of this broken level. So he has a breakout, retest at the same support, makes a push down, retest again at the same support, just a little bit further. Now, where we are now, right, in this diagonal moment here, on a daily time frame, you're going to see very clearly there's a pretty decent level of support running through. Now, if we cut off these overextensions, right, we can see that level of support, right, beautifully shown there, as well as all the way throughout there. And where we are right now. So where we are right now, the moment in time on gold, right, is we are at this bigger market structure support. But just also understanding that in most cases, before a big move right to the top side, there has been quite a dramatic breakthrough, or at least bear trap, specifically on the price of gold. But looking at where we are in the state of things, with imminent rate cuts on the loom, which will cause a weaker dollar, this may be the perfect storm situation that we see playing out in front of us. Now, a little bit closer, I found an additional market structure is super clean. I'll go into an hour time frame. All you need to do here is just look at those resistance levels, and you just utilize your parallel trend tool, right? And then you just move that one level just to match it up right there. So parallel trend tool, catch all those resistance, 1, 2, 3, 4, 5 of them, and then you'll see where we are sitting right now is a known area, right? A known area of support. Now, gold is one of the only instruments, right? We're seeing US 30 making some sort of recovery there, right? At least, I'd say 40-50% of recovery. Gold has not budged, even with that PPI data we saw yesterday, that negative PPI data for the dollar. Gold has not made any attempts to recoup some of those losses that it saw from CPI. And that is why I believe gold is in a perfect position, not only from a support perspective in this diagonal channel, but support perspective on a bigger time frame. And we may even find there's some deeper fib levels in terms of that actual retracement itself, right? We can actually go and test that out. Let's pull fib just behind my face there. I'll show you where I'm pulling it from. So I'm pulling a fib from the 13th of August, just to double check. So we've got 61.8, which we can see is a solid support there. And we see markets made an attempt to 78.6, but didn't quite make it there. So the next question is, where is gold heading to? Now, I'm pretty excited that there is a huge potential for gold on a 30-minute time frame. I'm just going to zoom in a little bit closer. There's massive potential for gold, not only to break out of this low area, right? And again, we mapped this out yesterday. There was a market structure that went a little something similar to this, a little channel that we kind of see support here. We're seeing that breakout and that retest of support. What I'm very keen on this morning is whether we start to see that 1995 push, right? We've only got a high of 1996. So $1,996 to an ounce is the highest level we've corrected since CPI, right? Now, a move above that could signal that, hey, there's dollar weakness here. The market is a lot stronger than people believe, and that may continue, right? We're seeing a similar thing on Bitcoin. Bitcoin has smashed through the $50,000 coin mark to that $52,000 a coin mark. So there's a lot of signs out there that there's imminent dollar weakness. Even with that red hot CPI number, there's a lot of signs out there. So we're monitoring quite a few different trades and quite a few different setups across the board, but I'm primarily interested in if we're able to recover and see any sort of 200-300 pip movements on gold as a recovery, right? And then moreover, if gold will obviously get back into that bull territory and break out its little sideways channel and make even an attempt into that 2100 mark, right? Which means, long-term trading, 1,200 potential pips towards that top side. So that's what we're currently looking at. All the signs at the moment that we can see in the markets, and I'm looking at across the board from a trade perspective, show me that even though there was that red hot CPI that we saw this week on Tuesday, there's a lot of signs that that weaker dollar is coming into play. That investors are looking long-term down the road, looking at those rate cuts, looking at the state of the US economy, that the US economy is strong, people are still spending, which has a bit of a positive effect on the dollar, but the overall movement here is all focused on rate cuts, right? Is those interest rates, those base rate cuts, and that movement from safe government-backed securities into things like Wall Street, commodities, etc. So that, I think, is the underlying tone. I think that's where the market's going to play out specifically over the next couple of weeks, but we want to try and get in early, right? So the team is super hard at work to make sure we deliver the best level of signals available. Again, if you're part of the free environment, you won't be seeing signals today or tomorrow. You'll only be seeing signals again next week, where we offer those 500 pips for free into the free community. If you want to get uncapped signals, if you want to get indices, if you want to get all the other stuff, you need to be a part of Premium Plus. If you want to get part of Copy Trade, you also need to be a part of Premium Plus. So that's my quick ramble this morning. A lot happening in the markets. I'm super excited for a lot of the developments we're about to see. The team has got you covered. As always, if you need anything, reach out to us. We're always here for you. And just much love across the board. I can see Petunia is in the house. She commented a little bit earlier. Motivational empowerment's in the house. Let's see, Ty and Lucky. Good morning, you beautiful human beings. Outside of that, guys, you know the drill. Be safe, trade safe. I'll see you guys a little bit later. I will be live Dollars for Lunch this afternoon with Premium Plus clients. We're going to dive a bit deeper into some of these things. I'm going to show you some other pairs that we're busy working on, and just some background info on what the team looks at prior to generating a signal. Outside of that, guys, listen, as always, much love. I'll see you a little bit later. Goodbye.